Okay. Good morning, everyone. Good morning. Good morning, Nisha, Vignesh, Niranjan, Mansha. Good morning. Uh, Sorry for the slight delay due to some technical issues. Okay. All right. So today's session, in AS 33, that is earnings per share. No debits and credits in this standard. Okay, it's purely a disclosure standard. It's purely a computational standard, an arithmetical standard with the what you can say with a lot of calculations, lot of questions, but there is no journal entry that is being passed. It is a disclosure standard wherein you are having its sole requirement is disclosure. It's a very key standard because if you are aware, your earnings per share is the only figure that is the connection between the market and the books. Okay. Are you aware of something known as the PE multiple? Are you aware of something known as the PE multiple? PE multiple is equal to market price per share divided by earnings per share. Therefore, market price is EPS multiplied by PE multiple. So in the future, if I have to evaluate the market price or I have to analyze or estimate the market price, the PE multiple can be taken from a comparatives, either past or of peers in the same industry, and the EPS. So your EPS is the only figure in your entire financial reporting that links the reported numbers as per financial reporting with the market capitalization. Okay. From that standpoint, this number becomes very important, and so does this standard. The criticality of this number is so much that the disclosures is not adequate only in the notes to accounts. Where do we see your earnings per share? We see the earnings per share right on the face of the P&L. Okay, we see the earnings per share right on the face of the P&L. That shows how important this number is. There are two types of EPS, that is your basic EPS and diluted EPS. You would have studied that. The concepts are coming same from what you have studied in your intermediate, that is your accounting standard 20, AS 20. Okay. So now when I calculate my EPS, from whose standpoint is it calculated? Is it from the standpoint of what do you say? Is it from the standpoint of the preference shareholders? Is it from the standpoint of equity shareholders? If I have multiple classes of equity shares, is it from the standpoint of these multiple equity shareholders? What does the EPS number calculate? It calculates the earnings per share from the standpoint of that equity share which is last in line, which is the most subordinate to all other classes of equity. There is no other category of shareholders subordinate to this equity share. From the perspective of that share, we are calculating the earnings per share. Are we clear with this? You may have category 1, category 2, shares with differential voting rights. You may have shares with differential rights. So the one who is going to remain last in queue at the time of disposal of assets in the case of liquidation of the company, from the perspective of that share, the earnings per share is always going to get calculated. Are you able to follow? Yes. Shall we proceed further? So in this particular standard, what is keen for us to understand is principles are mostly coming in from AS 20. Principles are mostly coming in from AS 20. So when I talk about principles coming in from AS20, I'm sure you would have studied something known as basic EPS. Have you studied basic EPS? Yes. What is basic EPS? Net profit attributable to equity shareholders divided by weighted average number of equity shares. Do you recollect this? Net profit attributable to equity shareholders divided by weighted average number of equity shares. Now, net profit attributable to equity shares, you are well aware of. It is profit after tax. Whatever is attributable to other providers of capital is adjusted. And finally, what is left attributable to equity shareholders is what is your numerator. Coming to your denominator is weighted average number of equity shares. What do you mean by weighted average number of equity shares? Why do I use weighted average and why not just equity shares? Because it is possible that the entity may have undertaken a change in the capital structure during the year. As a result, funds may have come in the form of capital at any time in the middle of the year or maybe towards the end of the year. It would not be available for utilization by the entity right from the beginning till the end. It could be available at any point of time. Are you able to follow? So therefore, I need to give a fair opportunity to the company for utilization of the funds. See, if you did an issue of equity shares on 15th of March, then your funds are available only for half a month. They are not available for entire 12 months. So if I calculate the EPS as total profit divided by total equity shares, then though the money is available only for 15 days towards the end of the year, I am ending up calculating the EPS as if the shares were available for the entire period. Are you able to follow? Yes. Are you able to follow? And therefore, it becomes crucial for us to give a weighing, to give a weightage to this particular time factor that is there as far as your equity shares are concerned. Okay. So when I talk about weighted average number of equity shares, this in particular stands for weights calculated in accordance with time. In accordance with time. So on this similar background, we will look at a couple of initial examples that you would have studied. Okay, so our approach will be quite simple. We will do certain questions where we look at how the weighted average number of equity shares are calculated. We will then proceed to calculate the basic EPS, which is nothing but a division of the net profit attributable divided by weighted average number of equity shares. And then we will proceed further and look at certain other issues like bonus shares, where you are having increase in the number of shares without increase in the resources monetarily. Then we could look at rights issue, which is having, a sense of bonus entitlement in part. And then we will look at the other complex issues of diluted EPS and the applicability of financial instruments to calculating the EPS, etc., etc. Okay. So we come back to our questions in this regard. Okay. All right. Fine. Now, okay. So I discussed this with you. Basic EPS shall be calculated as profit or loss attributable to ordinary equity holders of the entity. If there is a profit from discontinuing operations, then profit or loss attributable to ordinary equity holders, that is from both continuing and discontinuing operations, and profit or loss from continuing operations attributable to those equity holders. We will come to this particular part when we are doing a concept, maybe in the second session or third session, we come across a concept known as control number. That point of time, this becomes very critical. So then I will revisit this particular concept at that point of time. Computation of basic EPS will be net profit or loss for the period divided by weighted average number of ordinary shares outstanding. Okay, so this is what we have already covered. Now, when I talk about net profit, it is profit from both continuing and discontinuing operations. If I talk about consolidated financial statements, it is profit or loss attributable to the parent entity. Okay. And obviously from continuing. So you have to give total operations and continuing operations separately, adjusted for after tax amounts of preference dividend, differences arising on settlement of preference shares, similar effects of preference shares classified as equity. So numerator will include all items of incomes and expenses, including tax expenses and dividends on preference shares classified as liabilities. You will study shortly in your financial instruments, but I do have a scenario where preference shares, though they are nomenclatured or named as preference shares, in reality, because they have a fixed maturity period, the entity has an obligation to deliver cash at the end of a specified time period, and we are required to pay a specific coupon rate to them. So therefore, your preference shares, though they are named as shares, will actually be sitting under liabilities, will actually be sitting as part of your financial liabilities, because in reality, they are actually financial liabilities where you are obligated to pay an annual coupon rate, where you are obligated to deliver the redemption value in cash. For equity, there is no obligation to deliver cash on redemption. So therefore, when you study your financial instruments chapter, the first thing will be financial assets and financial liabilities definition. In the definition of financial liabilities, it comes as any instrument where you have an obligation to deliver cash. And because of that reason, redeemable preference shares, mandatorily redeemable preference shares, will not be categorized under the heading of shareholders' funds. They will go and sit as part of your non-current liabilities. Is it okay? That is why when they sit as part of non-current liabilities, clearly whatever is the interest cost or the finance cost attributable to such preference shares will not go after net profit after tax. It will in fact form a part of your profit before tax. When you're doing your PBT, you will be having the heading of expense known as finance cost. Those finance costs will include the finance cost attributable to these preference shareholders, Okay. Then we could be having any adjustment in reserves, which will be considered, particularly when you have premium on redemption of preference shares, whether it is debited or credited, all those items are going to come here. And for the parent entity, profit or loss attributable to the parent entity refers to P&L after adjusting for NCI. So that is your overall understanding of net profit attributable to equity shareholders. All right. So when we talk about certain specific items, uh, after tax amounts of preference dividends. So we are having two types of preference dividends. One is cumulative, one is non-cumulative. Non-cumulative preference dividends, after tax preference dividend declared in respect of the period on non-cumulative preference shares are included. After tax preference dividend for current period on cumulative preference shares, whether or not the dividends have been provided for. So we are having two categories of preference shares. Typically, cumulative and non-cumulative. So when I talk about cumulative, the dividend thereon goes on getting accrued, goes on getting accumulated. Okay. Whether you pay it or not is a secondary question. That's not important. What is important is you have to go on creating the liability year after year. So when you are going on creating the liability year after year, can I say that when I calculate the net profit attributable to equity shareholders, can I say that this net profit attributable to equity shareholders will already have the impact of cumulative preference dividend? Yes. Can I say this? When I talk about net profit attributable to equity shares, it will always year on year have the impact of this accrual of cumulative preference shares. Yes. So suppose for 2 years, I did not pay the preference dividend, but I pay it in the third year for all the 3 years put together. For all the 3 years put together. So now you tell me in year one, I have accrued. Year two, I have accrued. Year three, I have paid for years 1 to 3. I have paid for years 1 to 3. So when I'm going to compute the net profit attributable to equity shareholders for year 3, how many years preference dividend should I adjust? Should I adjust only one? Should I adjust two? Should I adjust three? How many years of preference dividend you should adjust? Because payment is happening for 3 years. Come on, tell me how many years? Should I adjust for three or should I adjust only for one? You should adjust only for 1 year. You should adjust only for 1 year. Why? Because this is already adjusted when I compute the net profit attributable to equity shares for the year one. Here also, I have already adjusted. Now, in the third year, if I actually do an adjustment for the 3 years, it will amount to double counting the preference dividends, the cumulative preference dividends. And therefore, in the third year, I will consider only 1 year which is adjusted, which is getting accrued. Payment I will ignore. Coming to non-cumulative preference dividend. What is non-cumulative? If in 1 year a dividend is not declared, it will not be paid also. The dividend does not get accumulated. Depending on management's discretion, if they feel that we have to pay a dividend, they will pay. If they feel that we need to retain the cash for further expansion or whatever, they will say we will not pay the dividend. So, and there is no obligation to pay the dividend in line with the terms of the issue of preference shares. And for this reason, non-cumulative preference shares, there is no liability if the dividend is not accrued. There is no liability if the dividend is not accrued. And therefore, non-cumulative, you will consider only when declared by the company. Only when it is declared by the company. That is exactly what is written. So after tax amounts of preference dividend include preference dividend declared on non-cumulative preference shares, number one. Number two, preference dividend required for current period, whether declared or not, because the terms of the contract clearly indicate that year on year, the liability accrues. Whether you declare or not is immaterial. Okay. Now, it excludes dividends on cumulative preference shares paid or declared during the current period in respect of previous periods. I told you already. Suppose in year 3, I pay for years 1 to 3. You will not include what is declared for the previous periods because they are already considered in the respective periods earnings per share. Is it okay? Yes. Shall we proceed further? Okay. All right. Today I don't see Hemant is not there. Vinay is not there.
Sir, actually, I think we don't have the proper timetable.
Oh, okay, 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 okay. I see. Okay, then probably it will be. Right. Yeah. Okay, fine. So let us continue. ठीक है. So coming to one of the questions, the net profit before tax of Mitra Limited was 200 lakhs. The income tax rate was 37%. The company's preference share capital has the following classes: 12% non-cumulative preference capital, 200 lakhs; 10% cumulative preference share capital, 300 lakhs. In its accounts, Mitra has provided or paid the following dividends on preference capital. On non-cumulative, it is fully declared for the current year. On cumulative preference shares, it is fully provided for the past 3 years. The company also provided for the dividend distribution tax at 12.75% and transferred 10 lakhs to general reserve. Calculate the net profit for the period attributable to the equity shareholders. Okay. So what is your net profit before tax? Your net profit before tax is 200. Correct? What is your tax rate? 37%. So 37% means 74. So 200 minus 74 comes to 126. This is your net profit after tax. Now, is this net profit after tax attributable to those shareholders who are the most subordinate to all other category of shares? Answer is no. There are two categories of preference shares which come here. So therefore, from this, I will be deducting preference dividend, right? I will be deducting preference dividend. First is on the cumulative preference shares. On the cumulative preference shares. On the cumulative preference shares, should I consider for the past 3 years or should I consider only for the current year? Current year. Nisha is right. What about the others? Niranjan, Usha, Vignesh, only for the past or for the current? Only for the current year. So therefore, I will be deducting only the current year. So I am having cumulative is 300 lakhs. So 300 into 10%. So 30. And then non-cumulative preference share capital, whatever is declared in the current period. So it is declared for the current year. So 200 into 12%. So 24. So 30 plus 24 comes to 54. Are you seeing anything else that needs to be considered? Yes, the dividend distribution tax at 12.75%. See, this DDT is going to be paid over and above this dividend. So clearly, the last category of shareholders who are most subordinate to all other shares will not get this money. So therefore, DDT is equal to 30 plus 24, 54 multiplied by 12.75%. So 54 into 12.75% comes to how much? 6.885. So we will subtract the dividend distribution tax 6.885. So now when I calculate 126 minus 54 minus 6.885, your net profit attributable to equity shareholders will come to how much? 65.115. Is it okay? Yeah. Is it okay? right? Okay, fine. Now, there is another category. Okay, now we move on to certain special things before we come back to the regular items. Okay. Increasing rate preference shares. Okay. When I talk about increasing rate preference shares, what happens is initially the dividend that is distributed is low. The dividend that is distributed is low. Why? Because initial year of operations, it goes into funding the operations, funding capex. So the cash available for distribution is typically on the lower side. So when the cash available for distribution is on the lower side, obviously this low initial dividend will be compensated by a higher dividend in the future periods. So that is why we call it as an increasing rate preference shares. Initially, I'll pay very less, but later on, I will start to increase the dividends beyond the market rate so as to compensate the low dividends that I gave initially. Okay. Now, treatment, the original issue discount or premium is amortized to retained earnings using the effective interest method and treated as a preference dividend for the purposes of calculating EPS, irrespective of whether such discount or premium is debited or credited to the securities premium, So let us look at one question. You will understand it better how this particular factor gets considered in my EPS. Okay. So this question is a part of the Ind AS 33 illustrations. Okay. So from there it's picked up. So let us continue with that. A company issued non-convertible redeemable Class A cumulative preference shares of rupees 100 par value at the beginning of year 1. So 100 par value shares are issued. These shares are entitled to a cumulative annual dividend of 7 per share starting in year 4. At the time of issue, the market rate dividend yield on such shares was 7% per year. Compute the following: issue price of the preference shares and treatment for computation of EPS. See, what is happening? If I have to put the timeline, am I getting dividend for the first 3 years? Am I getting dividend for the first 3 years? Answer is no.
No.
So when I'm not getting dividend for first 3 years, suddenly it increases from year 4 onwards. And year 4 onwards, you get a continuous dividend. Now the question is, should I compensate the shareholder for the first 3 years where they have only invested and not received anything in return? Yes. The company which has received this capital, should it not compensate for these 3 years when no dividend is paid? It should compensate, right? So how will it compensate? Sir, it will compensate by reducing the issue price in the first place. That means by giving a discount at the time of issue. So now what they are saying, this particular category of instrument has a dividend yield in the market of 7% per annum. So therefore, today the par value is 100. But this 100 will yield 7 rupees only year 4 onwards. So the present value of this 100 in today's terms, because the actual cash inflow is happening after 3 years. Today, if I have to compensate that particular person who is investing, I'm not paying him anything for years 1, year 2, and year 3. And therefore, I will have to issue it at a discount. Present value factor 7% for third year. Are you able to follow? Yes? Are you able to follow?
Yes, sir.
So that will come to 100 into 0.8162 or 8163. So you will be issuing a 100 rupees share at 81 rupees or 82 rupees. Is it okay?
Yes,
Yes.
sir.
That means आप क्या कर रहे हो? You are giving a discount of whatever 18 or 17 rupees. You are giving the discount on the issue of shares. You are giving a discount on the issue of shares. So issue price will be 81.63. In consideration of dividend payment terms, the shares have been issued at 81, that is at a discount of 18 per share. Okay. So now, when we are going to calculate the EPS, clearly this discount build-up should be shown year on year. Okay, so 81 plus 7%, 87, 87 plus 7%, 93, 93 plus 7%, growing up to 100. So in each year, you are having an imputed dividend. Imputed means a dividend which is already included in your discounted price. So that 81 is getting built up to 100 over the period of 3 years. So therefore, this is regarded as your imputed dividend, which you are required to deduct, at the time of calculating the EPS. Are you able to follow?
Yes, sir.
To calculate basic EPS, the following imputed dividend is deducted to determine the net profit attributable to ordinary equity holders. Okay? All right. The original issue discount of 18 is amortized using the effective interest method and treated as a preference dividend for EPS purposes. This is something which you would not have seen in your AS20 calculations. This is something which is fresh. Okay. All right. Now we close to that. Now, repurchase of preference shares at a premium under a tender offer to the holders. See, what happens is there may be certain situations where today I'm having a bumper profit. A bumper profit has given rise to bumper cash reserves with me. Tomorrow, I'm not certain whether these levels of profits, this level of cash will be there or not. So today, when I have this bumper available with me, I want to pay off my liabilities and say that, look, I'm paying your dues because today I'm sitting on a pile of cash. Suppose I have to actually, as per the terms, pay the amount after a tenure of 2 years or 3 years or 4 years. So when I'm redeeming today, will I be expected to compensate for the loss of earnings in the future?
No, sir.
No,
Redemption is already done.
see, this is a separate category. Okay, this is a separate category. Okay, let me explain again. I have certain preference shares. Okay, forget this. Let me do it in a different approach. Okay, suppose you take a vehicle loan. You take a vehicle loan. On the date of taking the vehicle loan, you say that it will be a 7-year loan. It will be a 7-year loan, and your EMI also will start getting calculated and debited accordingly. Suddenly, you switch your jobs. You get a very good offer elsewhere. Your salary triples. Okay, your salary triples of what you are earning currently. Now, with the triple salary, do you think you will still continue to pay your loan in 7 years? Or probably you will say that, why do I have to take this liability on my head? Let me clear it off immediately. So what you will do, you will start repaying upfront and you will ensure that the loan gets closed within 2 years. The loan gets closed within 2 years. The bank says that because you have foreclosed the loan or prepaid the loan 5 years in advance, okay, I have lost my interest for a period of 5 years. And therefore, I will levy something known as a foreclosure penalty. Is the bank justified in doing this?
Yes, sir.
Think from the bank's perspective. Is the bank justified in doing this? Answer is right. You have taken away the earnings of the bank for the next 5 years. You cannot say that, sir, मैंने principal pay करके I gave an opportunity to the bank to earn more, right? See, you were a customer whom the bank did their risk assessment, found you to be credit worthy, found you to be capable enough for carrying out the activity for the next 7 years of repayment. And they put their money on you. Now, when you repay the entire amount in 2 years, the entire calculation of the banks has gone for a toss. Now, after 2 years, they got a very low interest. They got the principal back. But banks cannot sit on the principal. They again have to find a credit-worthy customer. They again have to forward that loan, take the application, scrutinize. So you just increased their activity. And for that purposes, the banks are typically justified in doing this foreclosure penalty charges. Similar lines, suppose I have issued preference shares. Suppose I have issued preference shares. The maturity period for these preference shares is, let us say, 5 years. In the third year, you find that you have made some bumper profits, and because of this super profits which you have achieved, what is happening is you are ending up with high cash reserves. Now, you are not sure of the demand in your business in the coming 2 years. And because you are not sure, your cash position at the end of the fifth year for repayment of these preference shares is not very clear to you. And therefore, you make an offer for repurchase of preference shares. My question to you is, will you make an offer at par or will you make an offer at premium?
Premium.
Premium, sir.
In premium. Yes, everybody agrees it will be at premium. Because the preference shareholder is losing out on 2 years of earnings. So to compensate that, you will say, look, today I'm going to give you the face value plus a particular premium. Acha, will that premium be necessarily equal to the dividend lost for the next 2 years? Answer is no. The dividend will be payable at the end of the next 2 years. And therefore, you will obviously at the basic level, you will do a discounting to the present value and then calculate your premium. That's anyways a different matter. But my point is, you will not be issuing it at face value. You will offer certain premium for that. Now, the excess of fair value of consideration paid to the preference holders over the carrying amount. What is that excess? You are offering a premium, right? That premium, can I say it is a return to the holders of equity? Yes. To the
Yes.
holders of the preference shares, I'm sorry, to the holders of the preference shares. Can I say that?
Yes, sir.
And where am I going to charge it? It is paid to my providers of capital. So that will go and typically sit under retained earnings. Yes. This won't hit the P&L. You are redeeming it in advance, and therefore it goes and sits under retained earnings. Are you aware? Yes, retained earnings bolo, securities premium bolo, it does not hit the P&L, it hits the reserves. Okay?
Yes, sir.
Now, you are calculating your net profit attributable to equity shareholders. Uska net profit P&L se aata hai, net profit. So now, in that net profit figure, do I have this item as a reduction? Answer is no, because this is from the P&L. The net profit comes from the P&L, whereas this premium which you have given, this is sitting where? This is sitting under retained earnings. So therefore, less premium on repurchase of preference shares capital. I will deduct that to arrive at net profit attributable to equity shareholders. Are you able to follow? Yes. Any doubts? Any doubts? Okay, repeat the treatment part. Okay. See, when I calculate my net profit, what will be my starting point? P&L. Is this okay? My starting point will be the P&L. Now, when I'm paying the premium to my preference shareholders, that premium, will it go to the P&L or will it end up sitting in the retained earnings or other equity? You people have studied redemption of preference shares, right? So in redemption of preference shares, the premium normally where it goes, you either use your securities premium or you use your retained earning balances. Okay. So where does it hit? It is hitting the equity balance. It is not hitting the P&L. So your P&L is higher. Your P&L is higher. But you are using the profit to give something extra to preference shareholders. Yes or no? You are giving something extra to preference shareholders. And because you are giving something extra to preference shareholders, जो extra आप दे रहे हो, कहां से दे रहे हो? What is the source of that excess? That source is nothing but the earnings that the last fellow should get, the equity shareholder, most subordinate to all other categories of equity holders. And therefore, uske share में से आप काट के दे रहे हो. So when you are calculating that person's share, it will be nothing but net profit attributable, net profit from the P&L minus any premium that you are paying, which has gone to the retained earnings, which has gone to the retained earnings, which has gone to securities premium, which has gone to any other reserve created for this purpose. Because it has gone to reserves, it is directly getting adjusted in equity. But ultimately, कहाँ से adjust होना चाहिए ये? Because this has gone from the monies which would otherwise have gone to the equity shareholders. Yes or no?
Yes, sir.
Yes.
We will end up deducting this from the net profit as per the P&L. So that gives you the net profit attributable to equity shares. Any doubts?
No, sir.
Nisha, clear?
Clear, sir.
Okay, Jeannie confirm. Nisha, treatment part is clear. Okay, Mansha is clear. Okay, fine. Thanks. Yeah. So that takes care of repurchase of preference shares. Okay. So now you have an example from your study material on this concept. ABC had issued preference shares at rupees 100 each 10 years ago. Okay. Now ABC buys back the shares for rupees 120 each. Rupees 20 premium is charged to the retained earnings. Rupees 20 premium is charged to the retained earnings. No amount is recorded in the P&L for this transaction. What are you going to do for this excess 20? What are you going to do for this excess 20? This excess 20 we will deduct when I'm calculating my net profit attributable to equity shareholders. Is it? Yes,
Yes.
that's right. Reduce in P&L, reduce from the net profit. See, the treatment of charging it to retained earnings. Treatment is correct. So therefore, what are you going to do? Deduct from net profit as per P&L to arrive at net profit attributable to equity shareholders. Are you able to follow? Yes? Okay, fine. So this question is done. All right. Any doubts? No doubts? Okay, fine. Okay. Sometimes we are having something known as convertible preference shares. Okay, we are having something known as convertible preference shares. Convertible preference shares means what? These preference shares get converted to equity. These preference shares are optional. They could either get converted to equity or they could be redeemed in cash or they could be mandatorily convertible equity shares. Okay. Whatever be it. See, early conversion may be induced by an entity. Induced means an entity itself may say that, look, I want to convert your preference shares before the due date. Okay, why are you wanting to do this? Because of favorable changes to original conversion terms. Maybe you are getting a higher value if you convert today, or maybe through a payment of additional consideration, or maybe through payment of an additional consideration. So my point is, when you are doing a conversion, an early conversion, will you do it at same value or will you increase the value and do it? Come on. Same understanding. Preference shares 5 years to convert in 3 years. To convert in 3 years. Will you think the preference shareholder will agree to this?
No, sir. Some compensation has to be paid for
Yes.
that.
Some compensation has to be given. Some compensation has to be given. That some compensation which has to be given is nothing but
Profit for equity shareholders, distribution available
yes,
for distribution.
it will be a distribution from their profit. Where will this premium on conversion go? It's a premium on conversion. Where would
Securities
Net
premium or
profit
retained earnings.
attributable for equity shareholders.
it would go under retained earnings or securities premium. The excess of fair value of consideration over the fair value of ordinary shares issuable. Okay, fair value of consideration over fair value of ordinary shares issuable is a return to the preference shareholders. Is a return to the preference shareholders. And because you are paying them something excess in the form of a better conversion opportunity, that excess would ordinarily go and sit in securities premium, and therefore it is deducted in calculating profit or loss attributable to ordinary equity holders of the parent entity. Are you okay?
Yes, sir.
Same like last, only thing is previous example mein it was early redemption. Now it is early conversion. Now it is early conversion. Okay. All right. Now, carrying amount is greater than the fair value for settlement. Carrying amount is greater than the fair value. Sometimes it may so happen that I am not performing well. That is why I want to convert my preference shareholders. Okay. So clearly conversion is giving a loss to my preference shareholders. See, let it give a loss. Shareholders are supportive. They agree that, all right, we will step in. We will take the conversion terms even if it means a loss to us. So when they take the conversion at a loss, that loss also is hitting the retained earnings. So you will add back in calculating the profit or loss attributable to ordinary. Premium you deduct. So if there is a loss, you will add back. Are you able to understand? Yes. Premium diya to kaat rahe ho. You are deducting it in calculating profit. So when there is a loss, you add it back. You add it back in calculating profit or loss attributable to ordinary holders. Okay. Now, with this background, let us just have one illustration. ABC Limited issues 9% preference shares of fair value of 10 each on 1st April 20x1. Total value is 10 lakhs. The shares are issued for 5 years and would be redeemed at the end of 5th year at rupees 11 each. At the end of the 3rd year, that is on 31st March X4, company finds that it has earned good returns than expected over the last 3 years and can make the redemption of preference shares early. To compensate the shareholders for 2 years of dividend which they need to forego, the company decided to redeem the shares at rupees 12 each instead of the original agreement of rupees 11. Comment on the impact of early conversion of preference shares at a premium on earnings for the year X3, X4 attributable to ordinary equity holders of ABC Limited for basic EPS. Ignore the effective interest rate impact in the solution and answer only on the basis of Ind AS 33. So tell me, ideally redemption would happen at what value?
11.
11 rupees.
आप कितना दे रहे हो?
1 rupees excess दे रहे हैं.
1 rupee excess. So 1 rupee excess for 1 lakh shares. 10 lakh divided by 10. So 1 lakh shares into rupee 1. So rupees 1 lakh is your excess, which I will be deducting from the earnings while calculating the basic EPS. Are you able to understand?
Yes, sir.
Yes. Nisha, all clear? Jeannie,
Sure.
Yes, sir.
Vignesh, all clear. Okay, fine. Mansha, hope it's all clear. Okay, all right, fine. So coming to the next part. Okay. An entity has the following preference shares in issue at the end of 20x4. 5% redeemable non-cumulative preference shares. Redeemable means you will end up paying it in cash. These shares are classified as liabilities, already classified as liabilities. During the year, a dividend was paid on the 5% preference shares. A dividend was paid on the 5% preference shares. See, if it is already classified as liability, dividend is nothing but a coupon that you are paying. Actually, the finance cost would already have been recognized in the P&L. The finance cost would already have been recognized in the P&L. Is it okay? Yes?
Yes, sir.
So, finance cost already recognized in net profit. Therefore, no further adjustment. No further adjustment. Are we okay with this? Okay, you will study more about this, but for now, since it is already treated as a liability, you will not do any adjustment to this. Coming to the next part, increasing rate, cumulative, non-redeemable preference shares. Increasing rate, cumulative, non-redeemable preference shares issued at a discount in 20x0 with a cumulative dividend rate from 20x5 of 10%. The shares were issued at a discount to compensate the holders because dividend payments will not commence until 20x5. The accrual for the discount in the current year, calculated using the effective interest method, amounted to, let us say, 18,000 rupees. These shares are classified as equity. These shares are classified as equity amounting to 2 lakhs. So what are you going to do to this? We have already done a question of this type.
Imputed interest, right?
Yes, imputed interest or imputed dividend. So how much are you going to adjust?
Deduct from the P&L available for equity shares holder.
कितना deduct करोगे आप?
18,000.
18. Yes. Deduct rupees 18,000 from profit. Deduct rupees 18,000 from profit. Others, did you follow? Nisha, Jeannie, Vignesh, Usha, Mansh.
Yes, sir.
Follow? All right. Deduct 18,000. Okay. 8% non-redeemable, non-cumulative preference shares. At the beginning, the entity had 1,08% preference shares outstanding. But at 30th June, it repurchased 50,000 of these at a discount of 1,000. So repurchase is 50,000. So what are you going to do with this? What are you going to do with this?
सर रीपरचेज प्रीमियम की जगह डिस्काउंट पे हो रहा है तो प्रीमियम को हम
Edit.
लोग डिडक्ट कर देते तो इसको ऐड कर देंगे राइट
Yes. Nisha, anything you want to add?
No, I just said add it before you
Add.
calculate the.
सही है. So Jeannie, you followed? आप 1,000 डिस्काउंट पे repurchase किया है. You have purchased at a discount of 1,000. So you will add back this 1,000. Okay. So add back rupees 1,000 to profit. Add rupees 1,000 to profit. Okay. 7% cumulative convertible preference shares converted in the year. These shares were classified as equity until their conversion into ordinary shares at the beginning of the year. No dividend was accrued in respect of the year, although previous year's dividend was immediately paid prior to conversion. To induce conversion, the terms of conversion of the 7% convertible preference shares were also amended. The revised terms entitled the preference shareholders to an additional 100 ordinary shares on conversion with a fair value of rupees 300. So additional 100 shares at rupees 300. Are you able to follow? Yes?
Yes, sir.
Matlab, additionally, what are you giving? You are giving additionally rupees 30,000 to them. Yes or no?
yes sir
Yes,
So
sir.
this additional 30,000 is not
Deduct from-
hitting your P&L. So therefore, you will subtract it.
Deduct.
You will subtract it. Deduct from profit. Deduct from profit. Okay. The profit after tax for the year is 1,50,000. So therefore, what will be the adjustments? 1,50,000 minus 18,000 plus 1,000 minus 30,000. So this comes to 1,03,000. Are you able to follow? Yes?
Yes, sir.
Fine. So that is done. All right. Now we come to certain other easy parts, things which you have already studied, which you already know. Just a quick sum up of that. Okay. Denominator equals weighted average number of ordinary shares outstanding during the period. So basically, I will weight it for time. Okay, steps are given, but I think when we do the questions, you will understand the steps automatically. Okay. Following is the data for company XYZ in respect of number of equity shares during the financial year X1, X2. Find out the number of shares for the purposes of basic EPS calculation as per Ind AS 33. Opening balance of outstanding equity shares 1 lakh. Issue of equity shares on 15th June 75,000. Conversion of convertible preference shares to equity 50,000 on 8th November 20x1. Buyback of shares on 22nd February 20,000. Closing balance of outstanding equity shares on 31st March X2 2,05,000. Have you done weighted average number of equity shares calculations? किया होगा ना AS20 में.
Yes, sir.
Yes, sir.
तो यहां से आपको डेफिनेटली आना चाहिए. Just see if you can try this out right now. I will give you the answer. Don't look at the study module and answer. Okay. Let us see if you can handle this. Okay. Try it out. Try it out.
So you are on mute?
No, ma'am. I'm just given them something to solve. I'm just waiting for their response.
Okay, okay,
Just,
sir.
yes, ma'am. got some answer. Okay, Nansha, that's right.
Sir, 177, 233.
That's right. Okay, all right. So let us quickly have a look at this solution. Okay, there are two approaches to do this. Okay, there are two approaches. This is illustration 3. Okay. Okay. So opening balance of outstanding equity shares, these were there for the entire year. Okay, so you can take it as, let us first put the facts in place. Okay, so I don't have to revisit it again and again. Okay. So 1st April opening balance was 1 lakh shares. Then 15th June issued another 75,000. So here I had 1 lakh shares. 15th June, I issued another 75,000. 8th November, conversion of convertible preference shares to equity. So here I am getting another 75,000 plus 75,000 shares. And then conversion. So 8th November, another 50,000. Another 50,000 shares. 22nd Feb, buying back 20,000 shares. Minus 20,000 shares. Okay, so this is the overall picture. 31st March 20x2. So now let us do it in two different methods. We will see what different methods mean. End result is going to be the same. Okay. So I have this 1 lakh shares for the entire tenure. So weighted average number of equity shares is 1 lakh into 12 by 12 or 365 by 365. These are in days. Better to write it in days. Okay. Plus, you are having 75,000 shares that came your way. 75,000 shares into. What is the number of days between 15th June to 31st March? What are the number of days from 15th June to 31st March?
290.
290. Everyone got 290? Yes? Everyone got 290? Yes? Okay, fine. So into 290 by 365. Another 50,000 shares came to be added. And these were there for how many days?
144 days.
144. Did everyone get 144 days? Yes? Okay, fine. So 144. And then these 20,000 shares, they were not present for how many days? 38 days, right?
38 days.
They were not present for 38 days. So minus 20,000 into 38 by 365. So if you do this, you will get 177 to 33 shares. Any doubt so far?
Sir, actually, I have done with the calculation of month. That's why I've got some
Oh,
little.
rounding off gap.
Yeah.
Rounding off gap. Okay, fine. No issues. Okay. Or how many of you did by this manner? Everybody did in this particular method?
Yes, sir.
Acha. All of you did in this way. Okay. This method is good. Answer is right. No problem. And the study module also has given this. So this method is perfectly fine. But what it requires from your side is to be very alert about the changes in the capital structure. Okay. You will have to read and revisit it multiple times. Alternatively, what you can do is you have this timeline in front of you. I have 1 lakh
The
shares.
total cap.
I have 1 lakh shares till 15th June. 1 lakh became 1,75,000. 1,75,000 becomes 2,25,000 shares. 2,25,000 falls back to 2,05,000 shares. Is it okay? And then this, you will adjust it for time. So now, weighted average number of equity shares is 1 lakh into how many shares are there? How many days? April 30, May 30, June 14 days. So into 75 by 365. Is this okay?
Yes, sir.
Then I have another change in my capital structure. So 1,75,000 into. Now we will have to calculate the number of days. So number of days कितना आएगा?
144 days.
144 होगा या थोड़ा ऊपर नीचे होगा?
From
15th
1st of April till 8th of November.
From 15th June till 8th of November.
Oh, sorry, 1st.
15 days June के 31st, 31st, 30 और फिर 8.
I am getting 146 days. Are you also getting 146 days?
Yes, sir.
Yes, sir.
Mansha, just check your workings. June is 16 days. July is 31. August is 31. September, October, November. So this
सर
comes.
एक्चुअली हमने 15 डेज लिए थे जून में. रीजन है क्योंकि आपने 75 डेज में 15 कवर कर लिया था.
हमने 1575 में कवर नहीं किया है. 75 में हमने कैसे किया है? अप्रैल, मई,
ओके गेट इट सर.
जून.
14 डेज कवर के राइट.
Yes. 14 ही होगा वो, because 15th day you are already on 15th. You are getting the fresh shares in your number. Okay.
ओके.
So 146 days. So Mansha, did you check? It's not 143, it's 146. Okay. All right, perfect. So this is 146 plus next 2,25,000 shares. How many days?
One 46 11 is 22 plus 31 plus 21 plus 22.
106.
Yes.
November का 23 days. December, January, February. So 106. Yes or no?
Yes, sir.
Jeannie, Nisha, Vicky.
Yes, sir. Got it.
Got
Yes,
it?
got it, sir.
Got it. All right. So 106. And finally, you are left with 2,05,000 shares. into, okay. So last one.
days, sir.
38 days. 38 days. 7 days of Feb, 31 days of March. So if you do this, you should be getting the same answer. Are you getting the same answer? Please check.
Yes, sir.
1,77,233.
Yes, sir.
Okay. All right. Now, you can follow either of the two methods. So you can either follow each individual buildup of shares separately, like how we saw in the first method, or in the second method, what we saw was you go on taking the cumulative value of shares at each point of time where the capital structure changes, The first method requires you to be a little bit careful on the adjustments, okay, and to keep a track of each lot, how many days are you taking. The second method does not require you to be looking on a lot-wise basis, because what is happening when you are doing the build-up is already coming at each point in time when the capital structure is changing. तो आप वैसे करोगे, error chances in a high pressure scenario in your exam gets reduced. Okay, anyways, the choice is yours. Both the methods are right. Both the methods give the same answer. Okay, so that takes care of this illustration. Okay, all right, fine. Next, we have a couple of extra questions. Okay, all right. So let us start. Bonus is not yet started, no? Okay. In a financial year, Ravi Limited issues 80 lakh rupees equity shares at par on 15th December. It had also bought back 20 lakhs equity capital at par on 1st of March. The equity capital was rupees 150 lakhs at the end of the year. Calculate the weighted average number of equity shares outstanding during the period if the face value of each share is rupees 100. Compute basic EPS if the net profit attributable to equity shareholders is rupees 10 lakhs. Compute basic EPS if net profit attributable to equity holders is 10 lakhs. Okay. So, want to try? Yes. Closing capital is given at the end of the year. Fresh issue is given, buyback is given. So you can get the opening capital of 90 lakhs. Then this 90 lakhs is nothing but 90,000. 15th December, 80,000. 1st March, minus 20,000. So you could either do it. This is what is the manner of the institute. Okay. The process that the institute has followed, or this is the timeline method that we have done. So both I have given to you. Okay. Both I have given to you. Both are acceptable. Both are acceptable. Is it okay?
Yes, sir.
तो जो आपको यूज करना है आप कर सकते हो. Okay, so here we have taken it on the basis of months, because earlier some students had asked me, sir, whether to take on days or months. So here the movements are happening either end of the month or beginning of the month or in the middle of the month. So this point of time, I have taken it on the basis of number of months and done the working. it is fine. If you do it in number of days, there will be a slight variation, but I don't think that should be a problem. I don't think that should be a problem. Okay. All right. Fine. So that is done. So your basic EPS is nothing but net profit attributable to equity shareholders, rupees 10 lakhs divided by weighted average number. So it comes to 8.96 per share. 8.96 per share. Shall we proceed further?
सर एग्जाम में तो हम यानी मंथ लेकर करें या डेज लेकर करें, आंसर तो सेम ही आएगा, तो फिर कोई भी चल सकता है ना?
I think थोड़ा सा
हाँ,
maybe
थोड़ा सा
one
वेरिएशन आएगा।
plus minus 1 to 2 shares का difference होगा. I
Yeah.
don't think that really is a cause of concern. You will be awarded the marks. There won't be any issue. Okay. So you can always mention, if you are doing it in the number of days, you please mention alternatively solution can be presented in number of months for the time periods, in which case there would be a slight change in the answer. Okay. और अगर month में करोगे तो लिखो alternatively it could be presented in number of days.
Okay.
Okay.
Okay. Thank you, sir.
Keep your work simple and give the fact that you know the alternative also. Okay. All right. ठीक है. Question number 4. Compute weighted average number in the following case. Balance of equity shares 5 lakhs. Equity shares issued for cash 1 lakh. Bought back 50,000. Closing balance is 5 lakh 50. So very simple. Again, we have done both the methods. Yes. So 5 lakh on 1st of April. Then 5 lakh becoming 6 lakhs on 30th of June. 15th Jan, 50,000 bought back. So 6 lakh falling to 5 lakh 50,000. That's it. Okay. So 5 lakh, 1 lakh 50,000. That's it. Is it okay? Yes.
Yes, sir.
All right. Okay. Next. Question 4 is done. Question 5. Compute basic EPS for the financial year ending 31st March from the following data. 1st April, equity shares outstanding, face value 100 fully paid. 1st June, issue of shares, face value 100, paid up amount 70. Buyback of shares, issue of shares, net profit before tax, preference dividend. Okay. Will you do this for homework?
Yes, sir.
Yeah, it's quite basic. Okay, so try it out. Okay. All right. Next. At the beginning of a financial year, a company issued 1,20,000 shares. Oh, okay. Sorry, 1 minute before I give this to you for homework. These are partly paid shares. These are partly paid shares. So when you are having partly paid shares, what are you going to do? How are you going to calculate the weighted average number of shares?
Proportionate कर लेते हैं उसको.
Proportionate.
You will be doing it proportionately. That's right. So therefore, if we just do that quickly. Okay. So if we do it quickly, proportion of paid up fair value is something which is added here. 100%, 70%, 100%, and 100%. Rest all calculations remain the same. So there is no change in that. So only thing is you will multiply proportionate into period outstanding. 6 is equal to number of shares into proportion into time weighing factor. Okay. So that is the only thing that you will consider to arrive at the weighted average number of shares. Alternatively, you could do the timeline method also as discussed previously. Choice आपका है. It is your choice entirely. Okay. Any doubts so far?
No, sir.
No doubts. Okay. So
No,
this
sir.
time leave it with you. At the beginning of a financial year, a company issued 1,20,000 shares of 100 each. 50 per share was paid up, which was paid by all shareholders. Remaining 50 was called up on 1st September. All shareholders paid the sum except one having 24,000 shares. Net profit for the relevant financial year is rupees 2,64,000 after preference dividend of 64,000. Compute the basic EPS. You want to do this for homework?
Yes, sir.
Yes, sir.
कुछ है नहीं यहाँ पे, just go through. Okay, these are essentially basic questions to kind of refresh your understanding on certain basic concepts. So then we can move to certain newer things to discuss. Okay, all right. What will be the date for the purposes of timing as per Ind AS 33? See, when we said weighted average, what am I weighing it for? Sir, I am weighing it for the time. Sir, if you are weighing it for the time, then what will be my timing factor considered from? In all your questions, you have been given the timing. In all your questions, you have been given the timing. But in general, from a theoretical basis, this is the timing. In exchange for cash, when you are issuing, the date when the cash is receivable, not received. It is when the cash becomes receivable. On voluntary reinvestment, the date when the dividends are reinvested. Conversion of a debt instrument to ordinary shares, the date when interest ceases to accrue. In lieu of interest or principal on other financial instruments, whenever the interest ceases to accrue. Settlement of liability, you have given shares, then the date of settlement. Consideration for acquisition of an asset other than cash. You paid equity shares and bought cash. You gave your own equity shares and you got the asset, the date on which the acquisition is recognized. For rendering services to the entity, when the services are rendered. Consideration transferred in a business combination, it will be the date of acquisition. It will be the date of acquisition. Is it okay?
Yes, sir.
So this last one is something which is slightly different. We have an example for that. So on 30th June, Bharat Limited merged into Anand Limited. From the following relevant information for the year ending 31st March next, compute the EPS of Anand at the year end, that is 31st March. Anand and Bharat, net profit from date of merger until the year end, you are having. Net profit earned until the merger is 8 lakhs. Number of shares at the start of the year on the date of merger at the end of the year, that is 31st of March. Okay. So total profits of the combined entity. What is your total profits of the combined entity? 5 lakhs
15 lakh.
plus 8 lakh plus 2 lakhs. This we are not considering. Okay, it's not that it didn't earn any profit, it is not relevant to be considered. So 15 lakhs. And weighted average number of shares. Weighted average number of shares. We start off with 6,000 at the start of the year. So 6,000 at the start of the year. So that comes to 6,000 into 3 by 12 plus 10,000 into 9 by 12 plus 10,000 into 9 by 12. So that comes to 9,000. So your basic EPS of Anand comes to 167 rupees. Are we okay with this? Yes.
Yes, sir.
Major point is this 2 lakhs. You have to consider from date of merger until the year end. Okay. All right. So let us continue. Monica, all well?
Yes, sir.
Okay, so this is done. Conversion of a mandatorily convertible instrument, the date when the contract is entered into. Bonus issue or share split is something which we will be doing separately. Contingently issuable and returnable shares, we will see this later on. Okay. All right. Partly paid. Okay. Okay, fine. I will do everything up till bonus, then we take a break, and after the break, we'll complete the bonus and the rights issue. So in the next session, I think we can start off with diluted EPS. Okay. Now, bonus issue share split, we are anyways having a discussion later. Contingently issuable shares and returnable shares, we have separate question. We will do it at that point of time. Okay. Now, ABC Limited acquired a company in 20X1 for consideration paid in shares. If the profits for calendar years X1 and X2 meet the budget, ABC Limited will issue more shares to the vendor in February 20X3. Assuming reporting date to be 31st December, from which shares would the additional shares be included in the weighted average calculation if the targets are met by 20X2? So what your standard tells is you will be considering the additional shares from 1st January 20X3. From which date would the additional shares be included? From 1st January 20X3. Because you are meeting your contingency only by 31st December 20X2. Yes or no? See, what
Yes.
it say? You will be given additional shares if profits for these 2 years meet the budget. ABC will issue more shares to the vendor in February 20X3. But when are they actually available to be counted as shares? From the date they have fulfilled the condition. And therefore, that is 1st of January 20X3. Are we okay with this?
Yes, sir.
Yes?
Yes, sir.
That is done. Next. Party paid ordinary shares treated as a fraction to the extent they are entitled to participate in dividends. We have seen that. Completely vested options cannot be regarded as shares, hence not included in computation of basic EPS. Options, they still have not yet been converted to shares. It is an option to buy the shares. Options.
Not exercised.
Yes, unexercised. Yes, these are my unexercised shares. Options are similar to contingently issuable shares, which is recognized only when all conditions should be satisfied. Since option to purchase is not yet exercised, they are not included in basic EPS computation. For diluted EPS, you will consider the options. So, देखेंगे what is that? Okay, all right. See, I have so coming to questions 8 and 9. During the year ended 31st March, Giant made a public issue of 1 lakh equity shares of 10 each. The calls were made as under: 5 on application and allotment on 1st of July, 2 on first call made on 30th September, 3 on second and final call made on 1st January. Partly paid shares are entitled to participate in the dividend to the extent of amount paid. Company had 5 lakh shares outstanding at the beginning of the year. And apart from public issue above, there is no other change in the share capital. Compute the weighted average number of equity shares. So, not this is question 8. Yes. So 5 lakh shares were there for entire 12 months. So 5 lakhs. 1 lakh shares. In respect of this, the first call has that is share application and allotment money of 5 rupees has been called. This is for 9 months. So 37,500. 30th September, 1 lakh. 2 rupees called. So 20%, 6 months. So 10,000 shares. 1st of Jan, 3 rupees. 3 months. So 7,500. So total is 5,55,000. Total is 5,55,000 shares. Are we okay with this? Yes?
Yes, sir.
All right, fine. So that takes care of this question. Yes. All right. Bhaskar issued 8 lakh equity shares of rupees 100 each on 15th October. During the year ending 31st March, the company acquired an asset on 1st December for 25 lakhs and issued 1 lakh equity shares treated as rupees 25 paid up. At the beginning of the financial year, Bhaskar's equity capital was 5 lakh shares of rupees 100 each. Calculate the basic EPS if the net profit for the period is 37.5 lakhs. Okay, fine. So, what is the opening capital? 5 lakh shares. So, we'll quickly run through this. Okay. Opening capital, 5 lakh shares. This is there for entire 12 months. 15th October issued 8 lakh equity shares. So 8 lakh shares on 15th October. So 5 months. So proportionately 5.5 months. Okay, 15th October. 1st December, what did you do? For 25 lakhs, issued 1 lakh shares treated as 25% paid up. So 1 lakh shares, 25% paid up for 4 months. So that gives you your weighted average number. So basic EPS will be net profit attributable to equity shareholders, 37,50,000. Yes. 37,50,000 divided by 8,75,000. So 4.29 per share. Are we able to understand? Yes.
Yes, sir.
Yes. So
Yes, sir.
that closes this question. Okay. All right. Next. An entity issues 1 lakh ordinary shares of rupee 1 each for a consideration of 2.5 per share. Cash received of 1.75 was received by the balance sheet date. So now the question is, the partly paid shares are entitled to participate in dividends for the period in proportion to the amount paid. So calculate number of shares. Calculate the number of shares. Okay. So very simple. 1 lakh shares into 1.75 divided by 2.5. Proportionately करना पड़ेगा. So that will come to 70,000 shares. Are you okay with this?
Yes, sir.
So that is done. Illustration 70. Okay. So that's about it. We take a break of around 10 minutes and then we shall continue with weighted average number of equity shares. Is it okay?
Yes, sir.
Yeah, a small break of 10 minutes because now we shall be continuing with bonus and rights issue. Both of them are very important. Okay. All right. Fine. Thanks. Okay. So we look at the next set of concepts, that is essentially nothing but issue of uh, shares without a corresponding change in resources. Issue of shares without a corresponding change in resources. Okay. So now this is a case where it is either a bonus issue or a bonus element in another issue, for example, rights issue, a share split, or a reverse share split. Okay. So whatever is this, we will look at them from an example perspective. Okay. So we will look at the example, we will see the procedure of calculation, and then if you feel the need, we'll come back to the theory. Otherwise, you can handle the theory by yourself. Okay. So now, let us look at this particular example. Compute the basic EPS as per Ind AS 33 based on the following information. You would have done this question in your intermediate, but still we are just getting a understanding of the calculation behind it. Okay. Now, compute basic EPS based on the following information. Number of equity shares outstanding as at the beginning of the period, 5 lakhs. Bonus issue on 1st October of the current financial year, 3 shares for every 1 share held. Net profit for the current financial year is 160 lakhs. Net profit for the previous financial year is 50 lakhs. Okay. So this is question 10, right? Yeah. Now, first April, 31st October, 31st March. So 1st April, I had how many shares? 5 lakhs. First October, bonus is equal to 3 for every 1 held. So that is equal to 15 lakh shares. And then you will get your closing balance. Now, what is your net profit for current year? 160 lakhs. Net profit for previous year is equal to rupees 50 lakhs. Okay, fine. Now, let us try to understand, do you know the treatment of bonus shares for earnings per share calculation, or do you want me to go into details for that? Are you guys aware of why we do a particular treatment in the case of bonus shares? Hello?
Sir, when we issue bonus share, our EPS got reduced, na?
Okay. Yes. So, okay, fine. एक काम करता हूँ. I will obviously assume that this is the first time you are doing. So we will start from scratch level. Let us understand why we do a particular treatment. Okay. All right. So now, forget everything. Let us do it like a very normal regular question. So now in a normal regular question, my EPS for the previous year would be how much? My EPS would be rupees 50 lakhs divided by 5 lakh shares. Correct? Yes.
Yes, sir.
Do you agree to this, everyone? Yes. Now, EPS current year is equal to rupees 160 lakhs divided by 5 lakh into 12 by 12 plus 15 lakhs into 6 by 12. Do you agree to this? Yes.
Sir.
Forget bonus, forget everything, just treat it as a regular question. Do you agree to this or not?
Yes, sir.
Yes, plus 5. So this will come to 160 divided by 12.5 rupees 12.8 per share. Are you okay with this? Yes, यहाँ तक ठीक है?
Yes, sir.
Okay. Now your profit from 50 lakhs has gone up to 160 lakhs. Yes? Yes or no? That
Yes,
is
sir.
Yes, sir.
3.2 times increase over previous year. There is a 3.2 times increase over the previous year. But if you look at your EPS, 10 is becoming 12.8. 10 is becoming 12.8. So is this normal? 10 becoming 12.8, only 1.2 times. Your profit has increased 3.2, whereas your EPS is increasing only 1.2 times. Is it okay? Or is it something abnormal?
Abnormal, sir.
Abnormal क्यों है पता है आपको? Because in the current situation, see, if this were shares issued for cash, the situation would have been different. You can say that, sir, cash तो अभी आया है. That is why I had not used this entirely. But in this particular case, tell me, is there a cash influx that is happening in the case of bonus shares?
No.
There is no cash influx. There is no cash influx. So that means you always had this cash with you at all points of time. Yes or no? Whether it was at the beginning of the year, end of the year, कभी भी bonus हुआ रहेगा, forget that date. These shares were always available with you. Yes or no? सर कैसे अवेलेबल? बोनस तो अभी आ गया ना अक्टूबर में. यू आर सेइंग दैट इट हैज कम इनटू एग्जिस्टेंस ऑन 1st October. So how are you saying it was always available with you? What is the source of bonus shares? बोनस शेयर्स आ कहां से रहे हैं? बोलो यार. What is the source of bonus?
Existing shares.
Existing reserves, not shares. Bonus is nothing but capitalization of reserve. पढ़ा होगा ना आपने, reserves account debit to bonus to shareholders, bonus to shareholders account debit to equity share capital. Yes or no? So bonus is nothing but capitalization of reserves. And reserves, are they present right from the first day?
Yes, sir.
So therefore, can I say that bonus shares are present in the capital structure, but not as share capital, but as reserves and surplus? Can I say this? Yes.
Yes, sir.
So when my bonus is present right from the first day, why should I do a weightage of time calculation for bonus? भाई वो है already हमारे capital structure में. It is already there. You are not making any effort. You are just going, taking a board resolution, and then doing an allotment of bonus shares in the ratio that you have agreed upon. That's it. Uske alawa nothing else is being done by you. Yes, nothing else is being done. Issued on 1st October. Yes. See. So the problem that is giving a confusion to all of us is this. Bonus is issued on 1st October. This is a problem. Yes. बोनस इशू हुआ है 1st अक्टूबर को. आई वोट 31st by mistake. Okay, all right. Now, is it actually coming into existence on 1st October? अभी the latest bonus issue किसका हुआ? Are you aware in the market? Reliance came out with a bonus issue. Diwali के दिन it was a 1:1 bonus issue. Everybody got 1 extra share. Yes, everybody got 1 extra share. Yes. My question to you is, so Diwali was on, I think, 29, 30, 31st October ko shayad we all got the shares. Okay. Now, 31st October, when we got the bonus shares of Reliance, you tell me one thing. Did Reliance issue new shares to you? Or is, okay. Before this, let me come to the next one. When Reliance gave you this bonus share, the market value of each share of Reliance was worth 3,000 rupees, let us assume, prior to the bonus. Prior to the bonus. After you got one more bonus share, do you think your market value of share is 3,000 existing plus 3,000 bonus share, or is it 3,000 for both the shares put together?
So can you repeat?
31st October ko Reliance issued bonus shares. Suppose you are holding one share of Reliance. One share of Reliance had a market value of 3,000 rupees. Abhi Mukesh Ambani comes and tells, we have decided to give another bonus share. We have decided to give a bonus issue. So bonus issue is 1:1. Since you are holding one share, I will give you another share. And he gives you another share of Reliance. So now from one, you are having two shares. Tell me, what will be the market value of your holding? Is it 3,000 existing share plus 3,000 new bonus share, or is it 3,000 for both the shares put together now?
So 3,000 for both the share put
together. Everybody is convinced on this? Mansha, Ginny?
Yes, sir.
All clear? You agree? तो मतलब आपके खाते में बोनस शेयर आ गया, इससे आपके नेटवर्थ में कोई संबंध नहीं है, कोई इंपैक्ट नहीं हुआ. यस, यस और नो?
Yes, sir.
You got a bonus share, did not create any wealth or any maximization for you. You had one share worth 3,000. Today you are having two shares worth 3,000. Therefore, can I say that bonus share is not a serious issue of shares where the resources of Reliance are increasing? Can I say that?
Yes, sir.
इस बोनस से रिलायंस के बैलेंस शीट में what is the difference?
No difference, sir. Just a book entry is only reserves transfers to the capital accounts.
Yes. Everybody understood? No difference. Shareholders funds में reserves will go down, share capital will go up. That's it. Overall equity shareholders funds will remain the same. Overall shareholders funds will remain the same. Do you agree to this, everyone?
Yes, sir.
Yes. All right. So when I say it remains the same, that means opening position of shareholders funds. Let us suppose Reliance ने पूरे साल कुछ नहीं किया. Okay. For 7 months, Reliance did not do anything. So no profit, no loss, कुछ भी नहीं था. status quo was maintained. Okay. So whatever were the reserves on 31st March and the capital on 31st March, the total of that is exactly on 31st of October. Are you able to follow? Yes. So let us suppose 31st March equity capital reserves 100, 400, 500. 31st October को भी यही status था. Is it possible? If you do nothing or you do not make any profit or loss, nothing is there. So you would be again at a equity, I mean at a reserve, at a shareholders funds worth of 500 crores. Is it okay? Yes. This assumption is okay. Now, when I
Yeah.
issue bonus, what will happen? At the most, equity capital becomes 200, reserves and surplus becomes 300. Do you agree? Yes.
Yes, sir.
इससे
Yes,
ज्यादा कुछ नहीं होगा. 100 will become 200. 400 drops to 300. So can I say that these 100 shares have come into existence on 31st October, but they were always present even on 31st of March. Do you agree? Do you agree?
Yes, sir.
They were always present. Yes, Monica, do you agree?
Yes, sir.
Jeannie, Mansha, do you agree? Yes,
yes, sir.
they were always present. Sir, कहाँ दिख क्यों नहीं रहे थे? Because they were present in reserves and surplus. Now you are just moving it from reserves to equity share capital. So are you doing anything that is adding value in book terms? Answer is no. आप कुछ नहीं कर रहे. So can I say that in this question, though the bonus has happened on 1st October, it is actually present right from the beginning of the financial year. Can I say this?
Yes, sir.
You can say this, right? Others, Shabir, do you agree? Nisha, Usha,
Yes, sir.
all right, fine. So all of us do agree. Mansha, hope you also agree. So when I come back to this question and a bonus has happened on 1st October, these shares may appear to be visible now, but they were always present at the beginning of the year. Only thing is they were present in the form of reserves. Now they are coming in the form of capital. That's it. But key point is, please note, these bonus shares were always present, And therefore, what the standard tells is you cannot do this type of calculation. You cannot do this type of calculation. How you will have to calculate? You will have to calculate it as rupees 160 lakhs divided by 5 lakhs existing plus the bonus that has come in, 15 lakhs. So that will become to 160 divided by 20. So that is rupees 8 per share. Are we able to understand this? Yes? Bolo yaar.
Yes, sir.
Yes?
Yes, sir.
Yes, sir.
Yes, sir.
Mansha, you can unmute yourself and talk. Okay, no problem. Like others. Okay. Nisha, are you able to follow?
Yes, sir.
Okay. Now this has become even more problematic. Sir, profit has gone up from 50 to 160. Your EPS is coming down from 50 to 8, from 10 rupees per share to 8 rupees per share. Sir, one time you are saying profit is going up. Other side you are saying my EPS is going down. This is a travesty of justice, right? Because either profit goes up, EPS also should go up. Profit goes down, EPS should go down. Both of them cannot diverge away from each other. Yes. And therefore, I will extend this argument further. I will extend this argument further. This reserve, इसका सोर्स यही साल था या पुराने सालों से चला आ रहा है वो?
सो ये पुराने सालों का भी है इंक्लूडेड इसमें।
पुराने साल का भी रहेगा। मोनिका, डू यू अग्री?
Yes, sir.
मानशा, डू यू अग्री? शब्बीर, डू यू अग्री? निशा, डू यू अग्री?
Yes, sir.
Reserves are not only of current year. Reserves are something that is there right from the time you have started your operations. That means they were there in the previous year also. So therefore, when I am computing my EPS of the previous year, I will calculate it as 50 lakhs divided by 5 lakhs plus 15 lakhs. Why 5 lakh plus 15 lakhs? Because this bonus shares of 15 lakhs which you are issuing today is also present in the capital structure in the previous periods also. Is also present in the capital structure in the previous periods also. Do you agree to this? Yes? Yes or no?
Yes, sir.
And therefore 50 lakhs divided by 20 lakhs, this comes to how much? This comes to rupees 2.5 per share. Are we okay with this?
यस सर।
Monica,
Yes, sir.
Nisha, Shabbir.
Yes, sir.
Okay. Mansha. Are we convinced? Yes, sir. All right. So now your EPS of the previous year is 2.5 per share. So 2.5 to 8. What is the increase? This is 3.2 times. And what is your increase in profit? 3.2 times. And therefore, can I say that this is now making sense to me? Given that there is no change in the denominator, the EPS is increasing in exactly the same proportion as it is increasing for, profit, as it is increasing for the profit. Is it okay?
यस सर।
All right.
Yes, sir.
Okay. Fine. Okay. All right. Fine. Nisha, you could just consider muting yourself. Just have a look. Okay. All right. Fine. So is it clear? Yes. Did you understand?
Yes, sir.
Okay. Mansha, hope you also understood. Perfect. So now, what did I do? What did I do? Bonus के केस में, what are the changes that you saw in the calculation of equity shares, weighted average number of equity shares? Somebody, can you please summarize to me and tell me? बोलो
It
यार.
gave due effect to the earnings that are already present in the books of the company, sir.
Okay, so You can continue. You could add something. Yes, I'm waiting for you people to answer. Monica. Okay, let me ask you questions. Did I do a weightage for the bonus shares based on time?
No.
No.
No, sir.
So there is no weightage for bonus shares based on time. Why?
Because it
Because
is
it was
still,
already present.
Because it is already present. Absolutely right. So therefore, I did not give any weightage to time because the bonus shares are already present. Additionally, what I did, I went in a time machine back in time and I restated the previous year's EPS. Yes or no?
For comparing,
Yes,
sir.
sir.
For comparison purposes. Absolutely right?
Yes, sir.
Yes, sir.
Yes. So I restated the EPS of the previous period means that these bonus shares are assumed to be present in the capital structure right from the earliest day of reporting. Do you agree?
Yes, sir.
yes, sir.
Yes. Earliest day of reporting for my financial statements is not the opening day of current year. It is opening day of previous financial year. Do you agree?
Yes, sir.
So when I do my bonus shares, they are assumed to be present in the capital structure right from the first day of the earliest reporting period. Do you agree?
Yes, sir.
Yes, sir.
And therefore, if I now come back to this, deciding the date for issue of shares by way of bonus issue or share split. Timing is effective from, what is it? Beginning of the
Earliest.
earliest period reported. Earliest period reported is previous year ka first day is the beginning of the earliest period reported. Are you able to follow?
Yes, sir.
Yes, sir. Sir, I have one query.
बताइए.
Sir, it's like 2024, right?
Yes.
2023 is earliest period.
Yes.
And 2022 is also earliest period. And 2021 is also earliest
हाँ,
period.
बट आप कितने साल का बैलेंस शीट कंपैरिजन के लिए बनाते हो?
Sir, only last year, or only
बस
last year का
बस
बना.
बस बस बस. If
For
hypothetically,
question only, sir, कि वो मतलब I mean accounting perspective नहीं, just for question कि हम earliest period मतलब from starting beginning जब से उसने
yes,
EPS देना start किया, right?
yes, तो आपके सवाल तो मैं थोड़ा सा और उसको कलर करता हूँ. ओके, सपोज यू हैव डन अ वॉलंटरी इम्प्लीमेंटेशन ऑफ इंडेस. आप इंडेस करते गए करते गए करते गए. In between, you are coming out with an IPO. Okay, you are coming out with an initial public offer. Initial public offer के लिए one of the requirements is you have to present 5 years financial statements in the
Yes, sir.
draft red herring prospectus.
Yes,
Yes.
sir. Yes, sir.
Now, when you have to present a draft red herring prospectus, आपने current साल में bonus issue किया है. What will be the earliest date?
Last सारे all 5 years.
End of the 5th year का जो first day है, that will be the earliest reporting period that you will present as if the bonus is there right from that period. Are you okay with it now? Yes.
Yes, sir. Yes.
How many comparatives you are presenting? The earliest one among that, the opening period of that is what is going to be the date when the bonus is present.
Okay, sir.
So basically, सरल भाषा में, आम भाषा में, what you and I understand, करंट के अलावा जितने भी साल का प्रेजेंट कर रहे हो सब में बोनस ऐड कर दो डिनोमिनेटर में, एंड देन यू अराइव एट द revised or restated EPS. Is it okay? Yes.
Yes.
Ansha, did you follow? Jeannie, did you follow?
Yes, sir.
So preceding to previous years, we will consider if you are reporting the preceding period's financial statements. अगर आप 2 ही साल का कर रहे हो तो पिछले साल का ही कर दो. Yes, कोई बात नहीं. Okay, all right. Now that takes care of bonus. ठीक है. Well, all right. Now this question is done. I have nothing else to add on that. At the beginning of the year, Advait Limited's equity capital was 10 crores divided into shares of rupees 10 each. During the financial year, it has issued bonus shares in the ratio 1:1. The net profit after tax attributable to the equity shareholders for the previous and current financial year is rupees 8.5 and 11.5 crores respectively. EPS disclosed in the accounts for 2 years is 8.5 and 5.75 respectively. Comment on the EPS calculated above. Restatement नहीं किया तब जाके ये हो रहा है, तो restate करो, you will get the correct EPS. Are we okay with this? Try
Yes.
this out for homework. Okay.
Yes, sir.
Same thing it will be, nothing different. Okay. Tell me one thing. Bonus का पढ़ा आपने. If the date of issue of bonus is not given, they have only said it is issued in the current year. Is it enough for you to solve the question?
Yes, sir.
Yes. So
Yes.
please.
Yes, sir. Because
So,
at the end of the year, you would have the bonus included.
yes. At the end of the year, you will have the bonus. So please, if the question gives you only the fact that bonus is issued during the year, please don't say question is wrong, question ने सारा data नहीं दिया, ये वो करके मत करो. It is irrelevant. Last day of the year also, if you have a bonus issue coming into your capital structure, consider it right from the beginning of the earliest reporting period. That's it. Okay. So that takes care of question 11 also. Okay. All right. Fine. Now, can you do this for homework? On 31st March X2, issued capital consisted of rupees 10 crore in ordinary shares of 25 each and 5 lakh in cumulative non-redeemable preference shares of rupee 1 each. On 1st October, the company issued 10 lakh ordinary shares fully paid by way of capitalization of reserves in the proportion 1:4 for the year ended 31st March 20X3. Profit for X1, X2 and X2, X3 is 4 lakh 50 and 5 lakh 50 respectively. Calculate the basic EPS for X1, X2 and X2, X3. Okay, so please do this and provide the... can you do this by yourself? Do you really need my help for this? Yes?
First, we will do ourselves. Then,
First
if some
भी
query,
आप
then we will ask.
ठीक है, फर्स्ट भी आप ही करो, लास्ट भी आप ही करो, हो जाएगा. Okay.
Yes, sir.
If you have understood these 2 questions, ये भी आ ही जाएगा आप लोगों को. Okay?
Yes, sir, definitely.
You will get this. So illustration 4, I leave it to you. Illustration 5 also, I leave it to you because here there is a combo that is happening. 1st January issue, 28th February issued at fair value. This is not bonus. This is regular issue. Okay, this is a regular issue. So therefore, यहाँ पे you will have a time wait. यहाँ पे you will have a time wait that is going to affect you. Bonus issue, this will be considered right from the beginning. 30th November issued 2 lakh 50. Again, this is not bonus, but this is a regular issue. Is it okay?
Yes, sir.
Yes. So, ध्यान से करो. I think you should be in a position to crack this. Okay, calculate the
Only
number.
right of bonus has 12 lakh shares, right?
Which one?
starting 1st January and 2 lakh shares has a right of bonus only, right?
Yes, 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 yes. Because 1st January 10 lakh, 28th February 2 lakh, तो capital structure 12 lakh shares, 12 lakh पे bonus का right is available. Okay, the 12 lakh shares will be entitled to bonus. That's right. Okay, perfect. Anything else? Any other query?
No, sir.
तो ये आप कर लोगे, right?
Yes, sir.
Okay, so please try this. I think that's perfect. So try this for homework. Okay, fine. Now, bonus is done. That is the easy part. Now we come to rights issue. Okay, ये तो हो गया, ये भी हो गया. Now we come to rights issue. Okay. Can somebody tell me what is? Okay, I will take that up. Okay, I will take that up for practical purposes. ठीक है, I'll take that up, Mansha. Right now I don't have it, but maybe I'll download and keep it for discussion in the next session. But कर देंगे. Okay, all right. What is the meaning of rights issue? Anyone?
Preemptive rights to fresh issue of a company.
Okay. That means, see, whenever a company wants to raise capital, it just cannot go to outsiders and issue the shares. It has to first take approval of existing shareholders. And first, the opportunity must be given to the existing shareholders to buy those shares. Opportunity to existing shareholders is seeking their right because they have a right on the company's holding first. If they approve, then you can go to outsiders because fresh issue to outsiders means existing shareholders' stake will go down. Existing shareholders' stake will go down. So we are going to make an issue to existing shareholders at reduced price. उसको हम लोग बोलते हैं rights issue. Are you able to follow? Yes, we are
Yes.
going to make a fresh issue to existing shareholders at reduced prices. That is known as rights issue. Are you able to follow?
Yes, sir.
Reduced prices Q, because if you are giving to the existing shareholders, you don't have to make a prospectus again. You don't have to explain everything all over again because these are existing shareholders. They know everything XYZ of the company. तो आप कुछ नहीं करोगे इनके साथ. Okay, you will just go ahead and do your rights issue. That's it. So therefore, it will be at a reduced price. Reduced price किसके comparison में? In comparison to what? In comparison to the
Market value.
मार्केट वैल्यू पे इश्यू करोगे तो बोलेगा व्हाई शुड आई डू इट. ओके, यू गिव मी समथिंग बिलो द मार्केट वैल्यू, आई विल एंश्योर दैट इट गेट्स सब्सक्राइब्ड एंड यू गेट द मनी दैट यू वांट. सो वी कॉल दैट एज अ राइट्स इश्यू. वी कॉल दैट एज अ राइट्स इश्यू. द क्वेश्चन इज, does a rights issue contain a bonus element?
Yes, sir.
Yes. Why? Because I am issuing it below market value. I am issuing it below the market value. That is why there is a bonus element in the rights. There is a bonus element in the rights. Okay. Have you computed bonus element in rights, or did you just calculate theoretical X rights fair value, adjustment factor, weighted average number? Did you do it directly? कभी किया है?
Sir, I think fair value divided by the right price is bonus element.
हाँ, but have you computed it?
In ES 20, I guess.
अच्छा, किया है ना? Oh, अच्छा, I think Nisha has dropped off. Okay, fine, all right. ठीक है. So now we move on to the next one. Let us look at this question. We will try to solve it conceptually first, to look at what is the bonus component, how do we actually do the working, and how the calculation happens. Okay. And then we will look at the approach that you will follow in your examinations. Both are correct. You can follow either of them. Okay. All right. The following information is furnished by Samantha Limited for financial years 1920 and 2021. Net profit for 1920, 22 lakhs. Net profit for 2021, 30 lakhs. Rights issue is done, 1 share for each 5 shares outstanding. Yeah, 1 share for each 5 shares outstanding. Number of shares outstanding prior to rights issue is 10 lakhs. Rights issue price is rupees 25. Fair value of 1 share immediately prior to exercise of rights is rupees 32. Last date to exercise the rights is 31st July 2020. You are required to compute basic earnings per share for 1920, restated basic EPS for 1920 for rights issue, basic EPS for 2021. Okay. Now, the first thing that we calculate is determination of theoretical X rights price or fair value. So that is equal to, I have 1 share, 5 shares for every 1 share. Sorry, 1 share for every 5 shares. My bad. 1 share for every 5 shares. So my fair value is rupees 32. So 5 shares into rupees 32 per share. Against this, you are giving 1 share at rupees 25. Do you agree? Yes.
Divide by 6.
Divided by 6. That's right. 5 plus 1. So that gives you how much? That gives you rupees 30.82 or 83, whatever it is. Okay. Is it fine? Bolo yaar.
Yes, sir.
Okay. Now, जरा ध्यान से सुनो. Okay. How many shares have you issued? I am having how many shares in the capital structure? 10 lakhs prior to rights. Okay. Number of right shares issued is equal to 10 lakhs into 1 by 5,
2 lakh.
2 lakh shares. Are we able to follow?
Yes, sir.
Yes, sir.
All right. So therefore, मैंने 2 lakh shares issue किए. How much collection did I get out of that?
2 lakh into 25.
Number of shares at fair value. See, I have issued 2 lakh shares at rupees 25 each. So मुझे कितने मिलेंगे? 50 lakh rupees. Yes or no? बोलो यार.
Yes, sir.
Yes, sir.
I will get 50 lakhs. But what is the fair value of these shares? It is this amount. Yes.
Yes, sir.
See, before the rights issue, you have the market price as 32 rupees. Yes. So for every 5 shares of 32, you are introducing one share worth 25 in the market. Yes or no?
Yes, sir.
So therefore, now the 6 shares cumulatively have a value of 30.833 per share. Do you agree?
Yes, sir.
Yes, sir.
So therefore, these shares आप कलेक्ट तो कर रहे हो 50 lakh rupees, but in fair value terms, what is the number of shares you are actually issuing? It comes to 1,62,162 shares. If you take it 30.833333, it will come to 162 shares. Have you understood this?
Yes, sir.
Yes, sure, everyone?
Yes, sir.
All right. Therefore,
Bonus
you-
element is 2 lakh minus 162.
yes, bonus element is equal to, sir, I am issuing 2 lakh shares, but fair value element is only 1,62,162. So 37,838 shares is nothing but your bonus element. Are we convinced about this? Yes. Everyone.
Yes.
Yes. Mansha,
Yes, sir.
Mimi, all confirmed. Usha, Niranjan, hope you guys are following. Vignesh, yes, all clear. Let's proceed. Fine. Bonus element is done. Now it becomes any XYZ question. सर एनी XYZ क्वेश्चन का समझ नहीं आया, आप बताओ क्या बताना चाहते हो, राइट? So let us try to understand. 31st July 2020. So 1st April, 31st July, 31st March. So beginning I had how many shares? 10 lakh shares. Yes. Then 31st July बोलो या 1st August को बोलो. Last date to exercise is 31st July. So maybe we can take this as 1st August. I had here 10 lakh shares for these many months. And here I am adding 1,62,162 shares at fair value. Do you agree? Yes.
Yes, sir.
And additionally, I have a bonus component. 37,838 shares. Do you agree?
Yes, sir.
Jeannie, Niranjan,
Yes.
Mansha, Usha, Shabbir, Vignesh, all clear?
Yes, sir.
So what is your total number of shares? 10 lakh, 37,838 shares. And here it is 2 lakh shares. Yes? पक्का?
सर उधर काउंट कर लिए तो इधर क्यों काउंट कर रहे हैं?
10
क्या बता रहे हैं आप?
सर 10 लाख इधर ऐड क्यों नहीं करेंगे शेयर्स
कहाँ पे?
आफ्टर 1st August?
आएगा ना वो. This is only the additional 2 lakh shares. Okay? So यहाँ पे ultimately number of shares 10 lakh 37,838 shares, and here it will be 12 lakh shares. Are you okay now?
Yes, sir.
Yes, sir.
मोनिका, आप कुछ
Yes,
बता
sir.
रहे थे, यही 10 लाख के बारे में ही पूछ रहे थे आप?
सर नो सर सर क्वेश्चन है कि बोनस शेयर आपने दोनों जगह ऐड कर दिया था,
यस
बट फाइनली इज 12 लाख मैक्सिमम जाएगा, तो वो क्लियर हो गया।
37,000 दोनों जगह आएगा, बिकॉज बोनस का रूल क्या है? व्हाट इज द रूल फॉर बोनस?
बिगिनिंग फ्रॉम द पीरियड,
अर्लीस्ट।
हाँ अर्लीस्ट
तो 37,000 हमेशा है, हमेशा था, हमेशा रहेगा।
रहेगा।
Yes,
Yes.
37,838 shares. All clear? So this is your capital structure. 10,37,838. So what is my weighted average number of shares? 10,37,838. April, May, June, July, 4 months. Plus 12 lakh shares into अगस्त से लेके मार्च तक 8/12. So that comes to how much? 10,37,838 into 4/12. 3,45,946 plus 8 lakhs. So 11,45,946 shares. Have you understood, everyone?
Yes, sir.
बोलो। Himi?
Yes, sir. Clear now. Clear.
Yeah. Mansha, is it clear to you? Okay, fine. And then your basic EPS is equal to प्रॉफिट कितना है? 30 lakhs. Divided by 11,45,946 shares.
2.62.
2.62. Okay. Acha. Number 1. Number 2. Will I restate the previous year's EPS?
Yes, sir.
Yes. Basic EPS 2019-20 reported. हमने लास्ट ईयर कितना बताया था?
20 divided by 10. 22 divided by 10. Sorry.
22 divided by 10 lakhs. Yes. Divided by 10 lakh shares is equal to rupees कितना आएगा?
2.2.
2.2 per share. I am going to restate it. Why am I going to restate it?
Bonus element 10,37,000. मतलब
That's right. That's absolutely right. Did everyone understand this? 10,37,838 shares? Yes.
Yes, sir.
Mansha, did you follow? So bonus is available right from the earliest. Right from the earliest. So 22. So 2.12 per share. 2.12 per share. Any doubts so far?
no, sir. We always calculated with adjusted factors.
हाँ, तो अभी ये हो गया, समझ में आ गया अपने को?
Yes, sir. Absolutely.
Okay. This is the actual thing that happens. Okay. Now we come to solution that is there for presentation purposes. आप ये मेथड फॉलो करोगे You will definitely get the marks. But let us now see how the institute has done. And why this is better is because it avoids all this kind of differentials or all this kind of messing up. So very simple. We also started with theoretical X rights price 30.83. ये आपने देखा होगा 30.83. We also got. Then it calculated something known as an adjustment factor. This adjustment factor is fair value before rights issue divided by theoretical X rights price. So that comes to 1.04. You have calculators with you. Do one thing. Take 32 divided by 30.833333. You just do that. You will get 1.0. कितना था यार वो 37838. आपको ये मिलेगा as the adjustment factor. Yes?
Yes, sir.
यही मिल रहा है 1.037838.
Yes,
Yes.
sir.
What is this 0.037838? This is nothing but the bonus component that we have computed. It is restricted to 2 decimals. That is why 1.04 दिख रहा है आपने. Yes?
Yes, sir.
So when I come to my weighted average calculation, number of shares, 4 by 12, adjustment factor 1.04, 10 lakhs. So 345, 946. This is nothing but exactly what I also got, na? 345, 946. है कि नहीं? यहाँ पे. Yes.
लेकिन सर आज क्लियर हो गया कि एडजस्टमेंट फैक्टर एक्चुअली क्या है. पहले ये क्लियर नहीं था.
All right. So 3,45,946. 8 by 12, 12 lakhs, 8 lakhs, 11,45,946. Perfect. So 11,45,946. Is it clear till now?
Yes, sir.
Mansha? Vignesh has confirmed. Shabbir, Usha?
Yes, sir.
All right, great. Baki, these things we had done together, so that is exactly the same. Usme koi change nahi. Okay, all right. So this is done. So can I take it from you that you have understood rights shares completely? Yes.
Yes, sir.
You will have to revise it. I don't deny that. So what I will do is, question 12 is done from my side. Can you do question 13 by yourself? देखो सब कुछ सेम है. 22 लाख, 23 लाख, 1,10,000, फेयर वैल्यू ऑफ राइट्स इश्यू प्राइस, डेट भी सेम है 31 जुलाई. खाली थोड़े फिगर्स चेंज हुए हैं. कैन यू ट्राई दिस फॉर होमवर्क?
Yes,
Yes,
sir.
sir.
Do this as part of your revision without looking at my question. ये क्वेश्चन आप रिवीजन के लिए कर लोगे. You will be fairly comfortable with rights issue. उसके बाद आपको थोड़ा सा और कंफर्ट चाहिए ना, ये वाला क्वेश्चन भी होमवर्क के लिए कर लो. ओके. और आपको और भी ज्यादा कंफर्ट चाहिए तो ये वाला क्वेश्चन भी होमवर्क के लिए कर लो. आपको उससे भी ज्यादा कंफर्ट चाहिए तो ये वाला क्वेश्चन भी होमवर्क
बस
के लिए.
सर.
ओके, ठीक
आ
है.
जाएगा कंफर्ट उसमें.
बहुत ही ज्यादा कंफर्ट हो जाएगा इसमें से. ओके.
सर
हाँ,
गुड थिंग सर, आप अभी ये जो वर्किंग करते हैं ना, आपने वो अपलोड नहीं करी है.
नहीं, वो डाल देता हूँ मैं यार, डाल देता हूँ. अच्छा, आई विल रन यू थ्रू अ रियल लाइफ राइट्स इश्यू केस जो हुआ था. ओके,
Okay, sir.
you can run through it with me and then you can appreciate कि हम कैसे अप्लाई करते हैं उसको. All right, now there is this company EIH Limited. Okay, so EIH is basically, I suppose, a company in the hospitality sector. I think, yeah, this is the Oberoi group. Okay, so you have this Oberoi hotels which is there worldwide. So they are into the hospitality sector. So they had come out with the rights issue in 2019-20. Okay. So we will look at the factors from there. Okay. All right. And where do I start explaining? Okay. You have to give me some time to search for this data. Okay, 146. Okay. So they came out with a rights issue in 2020-21. Okay. So 2021 was a COVID year. I hope you are aware of that, right? So COVID year में there has been a tremendous hit on the hospitality sector. So by virtue of that hit on the hospitality sector, they needed the funds. So because of that, they came out with the rights issue. So let us look at the share capital disclosures that they have given. I hope the figures are visible to everyone. So reconciliation of equity share capital, this is the part I'm specifically referring to. You can see opening value of shares 2019 to 2020, there is no change. But 2020-21, can you see this? There is an issue on rights basis. Can you see this? Yes.
Yes, sir.
Sir.
And therefore, the closing capital is 625,364, 182 shares. Okay. So now let us look at this note number 56. Let us look at this note number 56. What is given? Or we come to page 63 of the annual report. Is this visible? Yes.
Yes, sir.
During the year, the company raised capital by issue of further shares to eligible equity shareholders of the company on the rights basis in the ratio of 8 shares for every 85 shares held. The shares were issued at a price of 65 per share, including a premium of 63 per share. समझ में आ गया? So my rights ratio is 8 shares for 85 shares held at a price of 65. Okay. So if I come to the structure, This was the number of equity shares that we had in the beginning. This was the number of equity shares we had in the beginning. 8 to 85. So आप multiply करोगे, you will get 537, 94, 768, giving you the closing number 625, 364, 182. This was the number of shares we saw in the share capital column. Are you able to understand? Yes, ये figure आपको याद है ना?
Yes, sir.
Yes, sir.
Okay, so this is the first working number of right shares issued. And this is issued 8 shares for 85 shares at rupees 65 per share. Okay, so now let us come back. The company issued 53,794, 768. Did I get that? Yes, 53,794, 768. आप अपने कैलकुलेटर पे चेक भी कर सकते हो, वही फिगर आता है. Aggregating to 3,496.66 million. Okay, so उसका आप multiply करके देखोगे उतना value आएगा. Why did they want this rights issue? It was raised for repayment of short-term and long-term loans availed from the banks and for general corporate purposes. The trading permission for the rights shares were received from the BSE and the National Stock Exchange on October 27, 2020 and from the Calcutta Stock Exchange on 2nd November 2020. Are you okay? Yes.
Yes, sir.
So now let us come to note number 56 का बात किया था ना उसने, वो कहाँ गया? नोट नंबर 56 ढूंढना पड़ेगा उसको. Okay. Note number 56. Look at this date. The company in its offer letter dated 21st September 2020 offered these many shares by way of rights issue at a face value of 2 each, price of 65, including premium of 63. Issue opened on September 29 and closed on 13th October 2020. So you come to this rights issue timetable. It opens on 29th September and it closes on 13th October. So your market price is 81.85 on 29th September. This is actually taken from the stock exchange prices of this particular company. आप चाहो तो आप जाके check कर सकते हो. And it is 76.2. Allotment date is 20th October when the price was 75.35. Record date is 23rd September 79 and dates prior to the record date is 78.3. I have just taken all the dates possible for our understanding. Are you okay with the timelines? Yes. Are you okay? यहाँ तक ठीक है?
Yes, sir.
All right. Perfect. So now, for the rights issue, the journal entry that will be passed is bank account debit 34,966. If you saw the disclosure, the notes that were given, 3496.66 million था ना? 1,000, 10,000, 100,000, million, 10 million, 100 million, 1,000. Yeah, 3,496.66 million was raised. So bank account, this much money has come. Equity capital has gone up by this amount and securities premium has gone up by this amount. Is it okay? All right, fine. Now, which is the X? How am I going to determine the X rights price? The price immediately before the rights issue. That means this is your fair value immediately before the rights. That is the word which is used in the standard. Are you able to see? Fair value before the rights issue. Yes or no?
Yes, sir.
Yes,
So
sir.
fair value before the rights issue 76.2 plus 8 into 65 divided by 85 plus 8. So my X rights price comes to 75.24. Is it okay? Yes,
Yes,
this is
sir.
Yes, sir.
exactly what we have done. So my rights adjustment factor is 76.2 divided by 75.24, 1.01281. What it was? It was nothing but
50 lakh.
50 lakh. That's right. 2 lakh into 25. ये वही है. नंबर बड़े बड़े हैं. Divided by 75.24. तो मतलब you have actually issued 465 crore shares at fair value, but actually आपने issue किया है 5.38 crores. So 73 lakhs जो है, this is the bonus element in your shares. Did you understand this?
Yes, sir.
Yes. So when I calculate my weighted average number of shares, allotment is happening on 20th October. Allotment is happening on 20th October. So 1st April to 19th October, for 202 days, I am applying this adjustment factor of 1.01281 on the number of shares to arrive at the weighted average number of equity shares. 20th October to 31st March, 163 days. I take the total number of shares in the capital structure to give me this, and therefore your total weighted average number of equity shares is 59, 96, 43, 471. Are you okay with this? This is exactly in line with this working. It is exactly in line with this working. Is it okay?
Yes, sir.
Yes, sir.
Yes. So now, when you come to the calculation of basic EPS, my net profit attributable to equity shareholders for 1920. $19.20, 1244.67. So 1244.67 divided by what is my weighted average number of equity shares? Well, in this year, the EPS workings, note number 49. When I go to note number 49, this is the number of shares. 571, 569, 414. So this is the original value divided by 571, 569, 414. But when I am restating it, what is the component that will get added? The bonus component is what is getting added to it. Yes or no?
Yes, sir.
Yes, sir.
So I am adding the bonus component, and you can have a look here. If I go to earnings per equity share, ये देखो 578888 578888 This is your bonus component, which we have already calculated separately. Is it okay? Yes.
Yes.
So
Yes, sir.
2.18 reported is becoming 2.15 restated. So this goes as your basic EPS for 1920. 2021 reported is a loss. So if you look at 2021 EPS, profit attributable is 343,124, 343,124, 0000 divided by weighted average. So minus 5.72. Minus 5.72. Is it okay? Yes. And
Yes.
then you can see basic and diluted earnings have been adjusted retrospectively for the bonus element in respect of rights issue made during the year 2021 in accordance with Ind AS 33 earnings per share Refer note number 56. Is it okay?
Yes, sir.
So they have also disclosed the fact that this is an adjusted number. They have also disclosed that fact. And where is this EPS sitting happily? It is sitting on the face of the profit and loss account. 5.7 to 5.7, 2.15. Okay?
Yes, sir.
Yes. So with
sir.
that, I think we have completed in the most exhaustive way our bonus as well as rights issue. Anybody has any doubts here?
सर
Yes.
सर मॉड्यूल का 9.84 पेपर नंबर निकालिए ना
9.84 मॉड्यूल का एक मिनट हाँ मॉड्यूल की रह गई 9.84 आपके पास पुराना है क्या?
नो सर न्यू मॉड्यूल स्टैंडर्ड 12 के बारे में पूछ रहा हूँ
स्टैंडर्ड
12
इंडेस 12
यस
अच्छा ओके एक इंडेस 12 9.84 81 82 83 84 हाँ जी बताइए
सर कैन यू एक्सप्लेन अगेन पॉइंट नंबर 4 क्वेश्चन नंबर 7 का पॉइंट नंबर 4
अच्छा ये वाला ओके फाइन ठीक है आई विल कम टू दिस मैं उसको थोड़ा फिनिश कर देता हूँ जो हम कर रहे थे राइट आई विल
यस
कम
सर
बैक टू दिस उसको थोड़ा सा आई गिव अ फिनिशिंग टच देन वी कैन डिस्कस दिस ओके सो ऑल क्लियर ऑन दिस yes so
यस
then
सर
tomorrow's I mean not tomorrow now this is almost done so okay on similar lines there is something known as buyback ये एक question है this is not there in the module also directly you will not find the applicability of this in your in days 33 also एग्जाम्पल के तौर पे आई हैव पुट इट जस्ट गो थ्रू दिस देर इज अ बोनस एलिमेंट इन बाईबैक ऑल्सो वेर यू पे अ प्रीमियम टू बाई बैक योर शेयर्स ओके सो इन दैट पॉइंट ऑफ टाइम हाउ इज द ईपीएस कैलकुलेटेड वो नेगेटिव आता है एडजस्टमेंट फैक्टर बस वो एक बार कर लेना आई थिंक वी आर देन वेल सेट फॉर बिगिनिंग आवर डिस्कशंस ऑन डाइल्यूटेड ईपीएस इज इट ओके
Yes, sir.
सो
Sir,
यस बताइए ना
can you please request to the BOS to update the schedule for
हाँ
the
वो कर
lectures?
देंगे वो कर देंगे
क्योंकि हमें अभी भी नहीं पता कल कौन सा लेक्चर है।
अच्छा मेरा लेक्चर ट्यूसडे को है ट्यूसडे को इंडेक्स 33 होगा तो
ओके
आप
सर।
ओके तो
Sorry,
you will have
correct.
index 33 on Tuesday and index 33 on Thursday also okay
ओके ओके
so Tuesdays and Thursdays हमारा index 33 है so all in all this is around 73 slides but if you look we have completed more than half but let me tell you today whatever we have discussed none of this will directly come in your examination because it is too basic it is too simple it is like only thoda sa rights ka issue hi aayega the major standard portions will commence from Tuesday onwards when we start diluted EPS and then we move on to applicability of financial instruments and finally we will wind up with contingently issuable shares. These are the major topics which are left out for the coming two sessions. Okay. So as of now, today we are winding up with Ind AS 33 for today's discussion. Okay. So coming to, okay, so anybody wants to drop off, they can drop off because I'm only discussing what is her query. Okay. That is related to Ind AS 12. Okay. Now, this is your taxation, I mean your income taxes. So on 1st April, X Limited borrowed rupees 1 crore. The cost to X Limited of arranging the borrowing was 2 lakhs. So as per Ind AS 109, the loan should be recognized at 98 lakhs. The loan should be recognized at 98 lakhs. Is it okay?
यस
Acha. But this cost qualified for a tax deduction on 1st April 20x1. That means for tax purposes, आपका borrowing कितने पे रहेगा? This 2 lakhs will go to the taxpayer. Okay. So for tax purposes, your borrowing will appear at 1 crore rupees. Is it okay? Monica?
Sir, repeat. Actually,
Okay, give me one time. Let me just open that up. Ind AS 12. इधर किया. See, loan. Ind AS 1 crore is the total loan minus 2 lakhs. So that is equal to 98 lakh rupees. That is equal to 98 lakh rupees. Is it okay? This is the value of initial recognition that you will recognize. Now, tax base. 2 lakhs, the cost of arranging the loan, this would have gone to the P&L. Therefore, the loan amount would be appearing at the value of 1 crore itself. Is it okay?
yes, sir.
Okay. Let us then proceed further. The loan was for a 3-year period. No interest was payable on the loan, but the amount repayable on 31st March 20x4 will be 1 crore 30 lakh 43,800. This equates to an effective annual interest rate of 10%. As per income tax, a further deduction of 30,43,800 will be claimable when the loan is repaid on 31st March 20x4. तो क्या होगा ना, this loan will appear like this. Opening balance 98 lakhs. Effective interest rate at कितना है? 10%.
10%.
And no interest was payable on the loan, but amount ठीक है, तो very good. So 98 lakh, मेरा काम आसान हो गया, 9,80,000. So closing balance will be 98 plus 9,80,000. So 107 lakh
80,000.
So opening balance ये हो गया year 1, year 2, 1,07,800. So 108 lakh 87,800. इफेक्टिव इंटरेस्ट रेट ही बोला है ना उन्होंने. Interest was payable. Oh, I'm sorry, मैंने गड़बड़ किया है. 9,80,000. सब हाँ में हाँ बोलते जाते हो. 10,78,000 लेगा. Yes, so 10,78,000. So 118 lakhs 58,000 into 0.1. So 11 lakh 85,800.
इंटरेस्ट क्वेश्चन ऑलरेडी कैलकुलेट करके दे रखा है क्वेश्चन में 30 लाख समथिंग जो इनकम टैक्स में.
एक मिनट. तो 130,43,800. ठीक है. So this is how the loan is going to look like. From 98 lakhs, it builds up to 1,30,43,800. Is it okay?
Yes, sir. Yes, sir.
Now, what the question is asking is, as per income tax, a further deduction of 30,43 will be claimed when the loan is repaid. So now, your tax base is 1 crore. Every year you are not paying the interest, so tax department says हम आपको interest नहीं देंगे. हम आपको interest क्यों दें? आप end में पे कर रहे हो 130,43,800. So therefore this interest of 30,43,800 will be given in year 3 when the interest is actually paid. Is it okay?
Yes, sir.
Yes, but for financial reporting purposes, are you getting an interest every year as a deduction? For accounting purposes, are you expensing out interest every year? है ना? 9,80,000, 10,78,000, 11,85,000. Yes.
Yes, sir.
So what is happening is, in your accounting regime, loan is at 98 lakhs. That slowly builds up to 1,30,43,800. Is it okay?
Yes, sir.
And then income tax, it goes at 1 crore throughout. And suddenly in third year, it jumps to 1,30,43,800. Is it okay?
Yes, sir.
So end में ultimately I am meeting a common point, right? So this difference between 98 lakhs and 1 crore and all these differences, can I say they are only temporary differences?
Yes, sir.
Because at the end, ultimately the value to be paid is the same under the tax base or under the accounting base. Yes or no?
Yes, sir.
And therefore, when the question is asking what? The question is asking what is the treatment? Explain how each of these events would affect the deferred tax assets or liabilities. So now you tell me each year, you tell me each of these years, I am having tax base appearing at the same value of 1 crore, whereas the accounting base is going on changing. Yes or no?
Yes, sir.
So what will be the impact? Will I recognize a deferred tax asset or a deferred tax liability?
The deferred tax asset.
You will recognize a deferred tax asset. So initially, the deferred tax asset will be on the amount of ये कौन से साल के लिए पूछा है या फिर ऐसे ही पूछा है?
सर ऐसे ही पूछा है और इसमें सिर्फ ओनली 1 ईयर कंप्यूट करके दे रखा है.
हाँ नहीं रीजन है ना उसका. During the year ended 31st March X2 है ना? तो it is asking for the year ended 31st March X2. तो ये हो गया मेरा
और
situation
स्टार्टिंग पॉइंट
20
ओके
X.
सर.
Yes.
गॉट इट. एक्चुअली मैंने ये फर्स्ट लाइन नहीं पढ़ी थी ड्यूरिंग द ईयर 31st मार्च.
काम ऐसे करोगे कि हम पहले लाइन नहीं पढ़े, दूसरा लाइन छूट
जस्ट
गया.
सर पॉइंट इस पॉइंट को सेपरेट क्वेश्चन मान के डील
Yes.
किया और सेपरेट क्वेश्चन मान के उन्होंने सिर्फ ओनली 7,80,000 पे ही टीटीए बना दिया एंड
Yes.
रिमेनिंग डिफरेंस इज 30 लाख का जो डिफरेंस था क्योंकि टोटल डीटीए 30 माइनस 780 जो रिकॉग्नाइज हो गया उसका
Yes.
भी डीटीए बनना था. तो
Yes.
इसीलिए हमने आपसे क्वेश्चन पूछा कि 780 का क्यों बना.
क्योंकि क्वेश्चन सिर्फ मार्च 20
1 ईयर के लिए पूछ रहा है.
था. आप इतना मेहनत करोगे एग्जाम में, हर साल का डीटीएल निकालते रहोगे, ये क्वेश्चन होगा 6 नंबर का, आप इसको 16 नंबर का आंसर लिख कर आओगे, आपको एंड में मिलेगा तो 6 ही, लेकिन 10 नंबर की जो आपने मेहनत इसके लिए करी थी, अगर वो कोई और क्वेश्चन में करोगे तो उसका नंबर मिलेगा आपको, फिर आप एग्जाम में आके बोलोगे ये क्वेश्चन बहुत लंबा था. तो ऑलवेज रीड द एप्लीकेबल, जो आपके लिए एप्लीकेबल है उतना करो, ज्यादा मत करो. ओके.
ओके सर. ओके सर. सॉरी सर.
अरे सॉरी मेरे को मत बोलो यार, मुझे सॉरी बोल के मैं क्या लेके जाऊंगा, मैं तो बुरा भी नहीं मानता. आपने 4 साल के लिए किए, आपका रिवीजन हो गया, बट एग्जाम में सिर्फ वो 1 साल का करना. ओके.
ओके सर.
ऑल राइट, परफेक्ट. एनीबडी एल्स हैज एनी डाउट्स? No doubts. All right. So shall we conclude then? Yes. Do
Yes.
those questions on rights issue and दूसरा कौन सा था? Buyback और बोनस, ये तीन चीजें आप करके आ जाओ, then I think you will be fairly comfortable for the diluted EPS, because now it's only the diluted EPS that we need to look. Next class we will close on the diluted EPS. On Thursday's class we will be doing 2 to 3 new concepts entirely. Then we are done with our system. Okay, we are then done with our workings. Okay, all right then. Thanks everyone. See you guys on Tuesday morning. Okay,
Thank you, sir.
Thank you, sir.
thank you. Take care. Session completed.